Hey, it's Michael John Mountain. In this video, I'm going to explain exactly why day trading is a waste of time and why you're leaving so much money on the table. You could be making so much more money from trading and investing by changing your mindset, changing your outlook, looking at different data sets, having a longer term outlook. Just making a few simple tweaks to the way you're thinking about stuff. And you can make millions of dollars doing that. But day trading, let's keep it real. 99% of day traders fail. 90% of them fail in the first 60 days. They blow out their accounts. Are there people making money with day trading? Of course. There are some really good technical people out there. I live in Chicago, Illinois. There's a lot of great option houses here that do make money from short-term moves. They're swing traders. They're people that are extremely technical. They're glued to their screen that do really, really well. But I'm going to teach you a much more simple way to look at things. I'm going to illustrate it with an example live in the marketplace right now, and an example that applies across time so you can make more money with your investing. Okay, so here we have a simple candlestick chart. It's one that you're probably very familiar with. Everyone's familiar with candlestick charts. Red means that it started high, went low. Green means it started low, went high. Basically. And it just tracks the price of the underlying asset that it's supposed to track. So here's the first problem with day trading. A lot of day traders don't even know what they're looking at. What are we looking at here? In this specific example, I've chosen Urban Outfitters. It's an equity that I'm personally tracking, I'm personally invested in, and I personally made a lot of money with. Let me show you where day traders are going wrong. So basically what a day trader is doing, or let's just say a short-term trader, someone with a short-term trade mindset, is that they're trying to find something by looking at a price chart, and they're trying to create a pattern. They're trying to find a pattern. They're trying to find price levels, find places to, or indicators to get in and get out, or get out and get in, sell and buy. That's what they're starting out with. So when day traders get a little more advanced, they're not just looking at just patterns and charts and trying to predict the price action of what's going on. They're going to get a little more advanced, and they're going to start looking at something called volume. So if we look down here, there's something called volume. And volume is represented by these ticks over here, these bars that go up and down. They represent how much action is going on every particular 4-hour increment. So we can look at going back, approximately 1, 2, 3, 4, 5, 6 months or so. There was a high volume day here that established this low kind of price point. But generally the volume has been pretty low. We look at the high point on volume was about 5.5 million, and average day was about 1.5 million, 1.1 million, 0.6 million. So it kind of bounces around in this range on these low volume days. But then there's one exceptional day over here where it was 5.6 billion. People will get even more advanced with the volume analysis. So from the price level, what else can we establish in terms of patterns? Well, we could do something called like a simple moving average. So if you look, I put in this little line over here. It's a simple moving average. It just averages the price level over time. So you can just use an arbitrary number. I just used, for example, 60. Or we can use something like 40. A lot of times these numbers will be arbitrary. When someone does this from a technical standpoint, a lot of the tutorials I see are just arbitrary. They're just an accepted way. But the basic idea is that the price is moving below the moving average. So it kind of indicates that it's a little bit oversold, and sometimes it moves above the moving average, which indicates that it's overbought. So when a asset is trading in a range, meaning it's going sideways, when it goes above the moving average, you can predict that it's going to go down below that line. And then when it's below that line, it's probably going to go and move above that line. So these are just general, technical, simple patterns that we're discerning from here. A lot of these day traders, the swing traders, the scalpers, they're more advanced, right? They're looking at something a little bit more advanced. They're going to do a volume analysis, something called volume. And you can be really simple with volume, or you could get really fancy and complicated with volume. But volume is going to be something like a footprint chart, or an order flow analysis, or a volume oscillator. There's different kind of technical indicators you can use. You can use data feeds to predict forward volume and price levels. But let's just analyze the volume from a basic standpoint. So here at the bottom, you can see that volume is generally at an average level. It looks like it goes from like about 0.8 to 1.1 million. But then you have these occasional spikes where it goes to 2 million, and over here where it goes to 5.5 million. So occasionally there's volume spikes, and when someone gets really advanced at technical analysis, they're going to know these days or these candles or these hours where there's spikes in volume, and they're going to say, okay, well, there's a little bit more significance to these high volume levels. So in this example, we can see that this closed at about 37.35. So that's an important price area from a technical standpoint. And it establishes this kind of equilibrium price point, right? So we could create a price level based on that close. That's the way I like to do it. It creates this equilibrium price point. So if a trader gets really advanced from a technical standpoint, they're basically going to create a volume profile. And this volume profile is going to be demonstrated this way. As you can see, the volume correlates to certain price points. There's more volume at certain price points. And then we could say that there's a certain equilibrium. So remember I established that equilibrium at about 37? Well, in this volume profile, the equilibrium looks like from this automation looks at about 39. So it looks like if we can predict where the price is going to move, we could say that this price is kind of moving in a range and it's converging down to a point. This volume analysis is also going to show us where there's low volume. So if you look at the top of the price chart, we can see that there's not a lot of volume at 49. There's not a lot of volume at, say, 45. There's not a lot of volume at 44. There is a lot of volume at 42, but then there's a volume gap at 42.2. Right? Then again, when we go down to 41.5, there's more volume. 41.2, there's volume. There's a little bit of gap at 40.8. Then there's more volume at 40.5. And there's another gap at 39.8. And then there's a lot of volume, which we consider the equilibrium price point at about 39.1. And then again, there's a volume gap at 38. And there's a lot of volume at 36. And then there's low volume at 35. So, given the volume price theory, some people call this a normal distribution. They'll say, oh, this is a bell curve. This distribution is going to predict forward looking where the price is going to be. So if we were to predict, it's probably going to bounce from 36.7 to about 38, to about 41, maybe 42. So that price level on these 4-hour candles, it could bounce between these areas because these areas with low volume, there's not a lot of liquidity there. People are not setting their limit orders and they're not fighting over these areas, but they are fighting in these areas at about 38. So if we were to set up a trade, what we would go from one jump to another jump. So for one area of like 38 to like 41. And we would assume that this is kind of a volume gap at around 40. So if we're doing an intraday trade, we could set something up where we could like buy at 38, sell at 41, or we could sell it like say 38.5 and we could buy at 37. This is just the basic volume profile analysis. And what people are going to do is they're going to create footprint charts. They're going to apply these charts on a day-to-day level. And they're going to put these numbers here and here, but it's just basically it's all the same thing. It's just a volume profile analysis to see where the equilibrium price levels are. And they just basically create this statistical normal distribution in their view that they think the price is going to stick to. I'm going to show you a flaw in that thinking very soon. So given this very basic technical analysis, and obviously we know this could get way more complicated. We could use way more indicators. We could get way more granular with this. We could use a lot of other tools. But just given this basic technical analysis, given the indicators, how do we set up a trade here? Well, it looks like there's a general bearish trend, right? And it's trading in a channel or in a range. It's trading in a range. And it looks like this last candle is over this moving average. And obviously we can modify the parameters of this moving average, but it looks like it's a little bit over. And with this like trend line and with this like moving average, we can buy or we can open our position somewhere in this range. And then it looks like it's going to go down given our volume equilibrium price analysis right here, which is 36.6. It looks like there's like magnetism and this price is going to go down and get filled in this area. So if I were a betting man, I would open the position here and I would close it somewhere here. And I would call that a successful trade. And we could set our stop loss somewhere over here. And we could go down and sell it over here. And that would be a pretty good profit area. We would make more profit than loss. And that's how we would set up our trade. Okay, now I want to go back to this price chart and I want to take the drawings off and the technical indicators and show you what actually happened to the stock. And you're going to be shocked by the result. So in this price chart, I'm going to fast forward the date so you can see what actually happened here. We're gonna take this date forward. We're gonna hit OK. Boom. Boom. The price is all the way up here. Did you see what happened? We were analyzing down here, and now the price is up here. Let me do that one more time for you. So the price was over here. We set up this trade to kind of take advantage of this volume profile analysis. And then when we fast forward a time frame, boom. Boom. The price shot up and went over here to 53 as a high. It's trading about $50. So it went from about 38 to about 50 or so. So the reason I wanted to show you this is because if you're a day trader, if you have a short-term trading mindset, there's no technical indicator that could have predicted this crazy price move up. Looks like just from bar to bar, if we just zoom in, it looks like it just rocketed it up. You can see these bars, it just goes all the way up, closes a little bit lower, rockets up, rockets up, rockets up, you know, flat, flat, rockets up again, flat, flat, rockets up again, flat, 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 rockets up, rockets up. There is nothing in the volume profile analysis. There's no equilibrium price. There's no statistics or statistical distribution that could have shown you this price move up. There's nothing in the data that indicated this move up. There's nothing in the moving average that indicated this price move up. There's nothing in the drawings that indicated this move up. I could have drawn you Fibonacci. I could have drawn you all type of lines. I could have created all type of MACD, all types of convergence, all of these different things, and none of that would have predicted this price move up. How would you have known that from this 4-hour to 4-hour basis that this was going to happen? There's nothing technical. There's no indicator. There's no alert. There's no email I could have sent you that would have just produced this to shoot this up. So what actually happened here? You see, the problem is that day traders are using data that's backward looking. And even if there's data that's forward looking, where you're looking at order flow, and you're looking at where people set up their limits, there's no possible way to predict a price move like this. If you can see, what actually happened was there was like a very big volume spike right here. So to illustrate what's happening, it's basically the analogy I like to use is there's like high school kids that are playing like tug of war. We're having like a little price battle here. So these little kids over here, and they're just basically fighting over the price. That's you. This is you, the little day trader. You're like, okay, I think it's going to be right here. I think it's going to go over here. And then finally, on one of these crazy days, what happens is a tank shows up. A military vehicle. A tank. A tank shows up with like a 50 caliber, one of those huge shells, and it just basically blasts through all of the stops. And that's how you see this crazy price move up. There's no limit orders over here that could have stopped this tank. There's nothing that could have stopped this volume surge, this huge price move. There's nothing in the data that would have shown you this. This price just kept moving. It just blasted through all the technical indicators. It just blasted through all of the, limit orders, all the sell orders over here. It just kept going. Nothing could have held this price back because this surge in liquidity is just beyond this historical data set. You could not have predicted this from a technical point of view. What was the trigger for this price move? What caused all this volume surge? Well, obviously it was something else, right? There's something else. There's a different data set that you're not looking at if you're just looking at this from a technical or a trading mindset. If you look down here, obviously there's an earnings call. And during this earnings call, there was earnings reported on the financial statement of this underlying stock that caused people that wouldn't normally look at this stock or equity to flood this market and come out of nowhere and knock out of the day traders out of the park. And they posted earnings that were a little bit better than expected, pretty close to expectation. But I was buying this somewhere around this range. So when I bought this, unfortunately, I didn't put in a huge stake in this. I put a small stake in this. But I was able to capitalize on a 40% price move. And I did that in under 5 days, under 3 days. I didn't have to do any kind of technical analysis or analyze order flow. I was looking at something else. I was looking at financial statements. I was looking at the bigger picture, So if you look at this, there's a quarterly statement that all publicly traded companies in the United States and globally post. And the basic earnings per share increased for this. It looks like it's 1.26, while on a usual quarter is about 0.66, 0.15, 0.89. So something about this 1.26 really excited the crazy marketplace right now. And this is a better explanation of what really moved this stock. It's the financials, the fundamentals, the income statement, the balance sheet, the cash flow. Something in the financial statements caused this stock price to move up. And there's nothing technical that could have explained that. Beyond that, when you consider valuation of an equity, valuation of a stock, there's a greater trend that's generally occurring and as it has been occurring for the past couple years in the wider marketplace that is generating these crazy returns. So if you look at this number, it says 64.10. That looks like over a period of 2 years. So when I research a lot of day traders, technical traders, a lot of people like that, a lot of them talk about making returns like 50%. Well, guess what? My year to date return is over 60%. I think I returned about 62% this year. Let me say that again. I think I returned about 62% this year without actively trading, without trading anything. So I'm profiting. I'm in the black big time. And the top traders in the world, literally the top technical analysts, the top traders, the top day traders, the top swing traders, the top scalpers, etc., they're making about 90% to 100, 120% a year. And they're doing this day in and day out. So I asked the question, like, what is the point? Why would you even do this if with all that effort and you need to be the top 0.001% trader in the world? Like literally like a World Cup champion of trading just to make those kind of returns. What would be the point when I could just buy a couple equities or buy a couple stocks and get a comparable return? I could get over 60% or 64% just investing in a couple stocks, making the right kind of moves instead of day trading day in, day out and just, trying to pull in some crumbs here or there over and over. It just doesn't make sense. There's better ways to make money. You're overlooking certain things. You're overlooking this. You're overlooking the balance sheet. So this is what I help people with. And there's no guarantee that I'm going to get a return like this next year. There's no guarantee that we're going to always make money from stocks. In fact, the next year might be a terrible year. But there is a guarantee that we're going to outperform day traders and we're going to outperform a lot of these swing traders as well. We're going to get better returns than them. And we're going to do that by looking at macroeconomics. We're going to look at different data sets. We're going to look at financial statements. We're going to know a little bit about accounting. We're going to know some stuff about business. We're going to know some stuff about politics and general trends and capital flows and interest rate policy and things like that in the marketplace that give you a more complete picture of where to allocate your capital and maximize your returns. So if you want help with that, if you want help with that process, go to my website, michaeljohnmountain.com. I have a lot of free resources, free discussions that you could take advantage of, and you could book a call with me and get trained, get education so you can take advantage of the marketplace right now. There's a lot of activity right now. There's going to be a lot of activity in the near future or the next 5 years, and I'm taking advantage of all of this. I'm boosting up my trades. I'm taking a more granular look. I'm taking advantage of growth, value as well. So I have a combination strategy, growth stocks with value. There are stocks that are growth stocks and value stocks at the same time. And I'm taking advantage of short-term moves, earnings calls, 90-day analysis, 100-day analysis, 3 to 5 year analysis, and 10-year analysis. I have a long-term view, but also I'm able to profit and make short-term money as well. Because really, it's just player versus player. There's a lot of big funds, people that went to graduate school and got finance degrees, but a lot of these people overlook a lot of like things and aspects in the market that are pretty simple to see if you've been in this game as long as I've been. And I can help you. I help a lot of my friends. I help a lot of my clients. And they're making really good returns and really good money. And we're going to, whether the market goes up or the market goes down, we're going to position ourselves to outperform the marketplace. If the S&P goes down next year, we're taking that into account as well. And we're going to try to outperform the marketplace year after year. So far, the past couple of years have been very spectacular for me. So I can, show you a really good track record all the way back from 2019, before the pandemic, during the pandemic, after the pandemic, and my skills are just improving. I went to one of the best businesses schools in the United States. I have access to some of the best financial mentors in the country, in the world, and I've been honing my skills in trading and the financial markets and macroeconomics for years. This is what gives me an edge in the marketplace, and we're able to take advantage of trends like this without a lot of work. So if you're an intelligent professional, if you're a technical professional, you're a financial professional, you're someone that has a regular job, or you run a business and you want to take your capital and make your money work for you, go to my website, michaeljohnmountain.com, and I'm going to give you some resources, and I'm going to help you, train you, and educate you, give you the proper education, the proper training and course over a, you know, accelerated but longer period of time for you to make intelligent positioning and investment decisions so you can get outsized returns and beat the S&P. Just because you're getting that 20% return this year, or you got 6% return the other year, it doesn't mean much. You need to calculate risk. You also need to factor in that you need to beat out the marketplace as well for you to get serious returns. We think like fund managers, we think like Warren Buffett, we think like the top traders as well. We're taking all these skills into account and we're putting it into a system that makes us beat the marketplace. And we're doing really well right now. If you want help, go to my website, michaeljohnmountain.com. Thanks for listening, and hopefully that was informative for you.